Hi, Peter. Thanks for joining me.
Steve, good to see you again.
Good
Happy
to
to
see
be here.
you. Yeah, happy to be here too. And we've got an interesting story here about foreign real estate investors shifting their focus. After 2 decades of really consistent buying patterns, we're seeing some real shifts in the markets and the segments they're looking at. Over the past 3 years prior to the pandemic, they really focused on office properties. That's about 38% share of total investment volumes, and it was really heavily concentrated in some key metros, really the six major U.S. gateway markets: Boston, Chicago, L.A., New York, SF, Washington, D.C. Those accounted for almost half of all foreign investment activity in the U.S. Uh, Multifamily made up the second largest concentration on average, and then retail, industrial, hotel. Now we've really seen a shift since the pandemic. Industrials become the new primary target for foreign investors. That jumped from 15% to about a third of all capital invested since the second quarter of 2020. Multifamily has gained an increasing share, um, coming in just second to industrial at just under 30%. Um, Retail has really kind of dropped there. But I think also more interesting is we've really seen a shift away from those kind of gateway markets into secondary and tertiary markets. They're really looking more broadly out at the rest of the country, as well as looking at different segments. So you really could have previously pigeonholed a lot of the foreign investment dollars going into really kind of almost trophy office properties in those kind of six gateways, and we've really seen a departure from that. Your thoughts on what that means in commercial real estate?
Well, um, industrial is where the money is going, and industrial, to me, remains a very attractive area, class of real estate, an area of investment. So, and why that is happening is it's the shift of individuals going to downtown shopping and doing online shopping, regardless of who they're doing the online shopping with. It's interesting. I have a very close friend who is one of the largest industrial building owners in the world. And what he has said over and over again and publicly is that these retail outlets, in order to do online business, need 3 times the inventory that they would have in an in-store facility. And so what that means is, well, industrial space has got to increase by a huge amount, by that amount. And as more stores move, well, what did we see? Bed Bath and Beyond, I think it was, went entirely online. No more in-store activity. So as that move continues, industrial, I think, is going to continue to be strong. Now, to me, the other side of it is, you know, the shift after 2020 and 2021, after COVID, there's been a migration of people. and that has caused a shift in real estate investing. And tertiary markets, I get that. That's really, in a way, where our investment firm is, and it's red hot. It's growing nicely, and we're not seeing the downturns that the big cities. You name the 5 or 6 centers that have seen declines, and so we're not seeing that. The tertiary markets aren't seeing it, and so foreign money is following the trend in the migration.
Yeah, I completely agree with that. I think they're kind of last to the party, actually. So, we've definitely keyed in on that move to more of the Sun Belt. We've definitely keyed in on that, move out of urban cores into the suburbs. We've keyed into things like, segments, like including multi-purpose, multi-use segments that combine different things. I think this is, in large part, people unfamiliar with the U.S. market, um, belatedly realizing some of these trends that are really, long-term trends that have quite a ways to run. So I think it just kind of, is another source of confirmation of a lot of things we talk about and as a business, areas we focus on.
Yes, indeed. I think you're spot on. So you and I are in alignment here.
Okay, good to be in alignment with you, Peter. Appreciate the thoughts.
Thanks, Steve. See you again.
Thanks.